Could we be setting ourselves up for a massive rally this week in stocks like AMC Entertainment? Well, we're going to get into that here in this video because I think odds are that we do see a continued rally. At least that's what the data and the technicals are telling us, and we'll get into it. Now, on top of that, sources say that First Republic potentially could be bought out by banks such as JP Morgan, PNC, or Bank of America, and that could be announced as early as Monday morning, shortly after First Republic goes into receivership. So odds are this stock does not go back to trading on the markets. If there is a buyout, the stock will be bought out at likely unfavorable prices, and that creates a problem in and of itself for these banks because there's a lot of debt here, and they're going to have to pull a lot of capital to buy First Republic Bank, and I think that just makes the forced loan recall situation that much more prominent. Now, on top of that, we're going to look at the technicals and give you guys a better picture of what's going on with AMC, as well as earnings and the economic data, because you cannot forget that. It's a big week. You got Fed Jerome Powell and Apple. I don't think you really have to say anything else. Just those two things make this week huge. Ladies and gentlemen, let's get into it. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. So first things first, let's start with First Republic. So this article says big banks, including JP Morgan Chase, Bank of America, asked for final bids on First Republic. U.S. regulators have asked banks for the best and final takeover offers for First Republic by Sunday afternoon, in a move that authorities will cap a period of uncertainty for regional lenders. JP Morgan Chase and PNC are likely bidders for the ailing lender, which would be seized in receivership and immediately sold to the winning bank, according to sources. Bank of America is among several other institutions that are weighing a potential bid for First Republic, according to people with knowledge of the matter. So let me just tell you, this would not be necessarily a positive thing for the bank that is buying First Republic. I mean, they do have some decent assets, but they have a lot of debt, and that's a problem. And that could cause forced loan recalls, because to buy this lender, they're going to have to put up a lot of capital. I mean, they're going to have to put up a lot of capital. And I mean, they already put up $30 billion collectively with all of these banks to shore up First Republic. Well, it's not looking so shored up right about now. So that can definitely start to pull liquidity out of the markets. That could be a very positive thing, as we are gearing up for AMC earnings, which will be coming on Friday pre-market. And I think this is very interesting as well. It might actually help us out a little bit because AMC reports earnings Friday pre-market. You're going to have just Friday to react to earnings. And then coming next week, that's really where you're going to get the full digestion of AMC's earnings. And why that could be a good thing is because sometimes people tend to freak out after earnings, whether they are good or bad. Sometimes people freak out, right? Over the weekend, you're going to have more time to digest this and could get a better picture of what's going on with AMC earnings. And the estimates for AMC earnings continue to go higher, likely meaning AMC is going to beat on earnings and give you some upbeat guidance. And that is what could help fuel an upside move into AMC earnings. Now, keep in mind, AMC is massively shorted. The cost to borrow rates are out of this world, and shorts are losing massive amounts of money, billions of dollars every 3 months. They lost well over $2 billion in Q1 of 2023 alone. There's only $700 million currently sold short in AMC, just to put that in perspective. And I keep pointing that out for people because it's the perspective here. That is a lot. That's like 150% loss on average in Q1. It's not a 10, 20% loss. It's 150% loss. that's very bad. That is not a good thing for shorts, right? Good thing for us, not a good thing for shorts. Now, AMC stock, granted what I just said, you likely do see a rally this week. It would not surprise me to see that pre-earnings run up. Now, on top of that, you're going to have other earnings such as SoFi Monday morning, Norwegian Cruise Lines. Those are going to be the two big names. Then Monday after hours, MGM Resorts, Transocean, Diamondback Energy, Avis Budget Group, NXP, MicroStrategy, Vertex, CF Industries, and Chegg. Tuesday pre-market, Uber, Pfizer, BP, Marriott International, Marathon, Enterprise Products Partners. That's basically it. Tuesday after hours, AMD, Ford, Energy Transfer, Starbucks, Lumen, Caesars Entertainment. Wednesday, pre-market, CVS Health, Yums, Barrick Gold, Phillips 66, Generac, Estee Lauder, WWE, SunPower. Wednesday after hours, Qualcomm, SolarEdge, Mercado Libre, Sunrun, Fastly, Marathon Oil, Etsy, HubSpot. Thursday, pre-market, Datadog, AB InBev, Moderna, Royal Caribbean Group, Peloton, ConocoPhillips, Shell, and APA Corporation. Thursday and after hours, obviously this is going to be the big day. Apple, Shopify, Block, Coinbase, DraftKings, Lyft, Carvana, Booking Holdings. And just Apple alone is 10% of the NASDAQ. It's 7% of the S&P. So their earnings are going to be very important. And Apple, even though they've lowered the bar for Apple, it's still kind of high relative to the numbers we got last quarter and the big kind of miss we've seen from Apple last quarter, which that's the craziest thing about this whole rally is people have been expecting worse and worse earnings for 2023. But stocks have continued to rally, right? The large tech stocks continue to rally even though we're expecting bad earnings in 2023. It's really ass backwards, to say the least. Usually stocks go up because earnings estimates are going higher, not when they're going lower. Apple is almost at a new all-time high. That puts the markets in a very tricky situation heading into Apple earnings on Thursday. Now, Friday, AMC, pre-market, Warner Bros. Discovery, Fubo TV. These are going to be the three big guys Friday pre-market. And like I said, you're going to have Friday to kind of trade AMC to see how people are reacting to earnings. And then after Friday, you're going to have the weekend to digest this and could get a more solid move coming the next week. But I think there's a very good chance that AMC runs up heading into earnings. Now, there's other factors at play here. And people like to say I'm a permabull. I don't like to think that. But what we've seen recently with AMC is on good days, AMC outperforms, right? If the markets are up 2%, AMC is usually up 4%. On bad days, AMC tends to outperform as well. So AMC is just outperforming. It's up quite a bit from the start of this year. So we'll see what happens. But starting on Monday, you're going to get the ISM manufacturing PMI. You're expecting that at 46.5. Not really going to be a huge catalyst, but it can move the markets quite a bit. Jolt's job openings, expecting that at 9.7 million coming Tuesday at 10 o'clock in the morning. Factory orders month over month, you're expecting that to come in at 1.2% positive. Pretty high expectations there. And Jolt's job quits, you're expecting that at about 4 million. Now, Wednesday is where things really start to kick into full steam ahead. ISM services PMI coming in at 10 o'clock in the morning, expected at 51.5. And then you have Fed Jerome Powell in the interest rate decision coming at 2 p.m. You're expecting rates to get risen by 25 basis points. And really, it's all about the commentary, right? We don't care about 25 basis points unless they were to pause on us or give you 50 basis points or something out of expectations, but they're not going to. They never do. They always go with what the markets are pricing in, and that is 25 basis points. Now, what do they say about number one, the economy? Number two, their path forward with their interest rates, or if they plan to pause at the next meeting, or if they just say they need to remain data dependent, and the data is supporting more rate hikes as service inflation does not go down. And then at 2:30 p.m., you have the Fed press conference. So Wednesday is going to be massively important for the markets. And it's interesting because Wednesday is the day before Apple reports earnings. Usually when these kind of things happen, you tend to get Apple reporting earnings before the Fed meeting, not after the Fed meeting. Now, the balance of trade also comes out Thursday. Not really expecting too much there, but I mean, our deficit is insane. Negative $63.1 billion is the estimate, coming in at 8:30 in the morning. Initial jobless claims expected to come in at 245,000, 8:30 in the morning on Thursday. You will get that. Non-farm productivity, unit labor cost, that's probably going to be the most important one right there. Unit labor cost at about 3.6% is the expectation. So there you have that. On Friday, you're going to get some big data as well. Non-farm payrolls, you're expecting that to come in at 190,000. The unemployment rate, you're expecting that at 3.6%. Average hourly earnings month over month and year over year, and average weekly hours. All of these will be very important. Keep in mind, the last non-farm payrolls report that we got was better than expectations, but a lot of people pointed out that if you took out the 80,000 some jobs that were added from the government, non-government job ads, the private sector was actually well worse than expectations. It was actually pretty damn bad. And I don't think that gave people a lot of comfort last time around. So there's your outlook for First Republic. There's your rundown of earnings. There's your rundown of economic data. Again, Apple earnings going to be massive for the markets, as well as Fed Jerome Powell. If you wanted to boil this whole week down to two catalysts, it would be that Wednesday Fed, Thursday Apple, and throw in there Friday non-farm payroll report as well as the unemployment rate. Now we're going to have smaller catalysts, things that can move the markets as well, but those are the catalysts, right? Those are the big dogs of this week. Now let's go ahead and switch gears. Let's talk about AMC and what's currently going on. So a big number that I want to pay attention to over the next coming weeks here as shorts continue to get squeezed, maybe not squeezed out of their positions quite yet, but continue to get squeezed, is the short interest dollar amount. So $727.51 million worth of short positions currently on AMC. If this number continues to go higher, meaning the AMC stock continues to go higher, or the short interest continues to go higher, I think it puts a lot more pressure on shorts. Obviously, they're losing a lot of money. This number was just 500 million a couple days ago, right? Before you got that hammer stick candle, and we've seen consecutive green days ever since. It was a lot lower. So they're losing money there. Lots of money, hundreds of millions of dollars. They're also losing hundreds of millions of dollars every month due to cost to borrow fees. And that's also a problem for the hedge funds. Now, estimated short interest of free float at 26.24%, free float out on loan at about 36%, shares out on loan 185 million, days to cover at 5.09, and cost to borrow trailing 3-month average at 256.87%, also 100% share utilization. If we do go ahead and take a look at the option activity that we've seen on Friday, 59 orders totaling $31.58 million, positive order value of 3%. And I kind of expect the options to get a little bit more bullish heading into AMC earnings Friday, right? I do think you see a ramp up in AMC's share price ultimately. And I do think that is going to help squeeze shorts out of their short positions. I do ultimately think earnings are going to be pretty good, right? The estimates, people are expecting decent earnings out of AMC. Now, if AMC can throw away that narrative that maybe the company will go bankrupt without the reverse split, I think that's when you could get more shorts covering on their short positions. Now, a quick look at the technicals. AMC stock continues to be on this breakout here after this hammer candle right here. It's been straight up 4 trading days in a row ever since April 24th, and I think this is likely to continue. Now, if you look at the RSI, it's at 57.74, not indicating overbought conditions, and that's because this rally has been very much back and forth but heading higher towards the close of the day. AMC stock up 2.5% on Friday alone and looking to make that next big move higher. Now you're well above at this point the 50 and the 100-day moving averages, sitting at about $5.30 per share. Just call it a rough average there. $5.25 per share is a rough average. Now, you also seen the 50-day moving average break above the 100-day moving average. That is also a very good short-term momentum sign, right? That means the last 50 days are getting pretty bullish, right? More bullish than the last 100 days. And that is good. Now, the MACD is also in bullish territory slightly, but it's not anywhere close to being, overbought. Obviously, look at the chart. AMC could rally exponentially from here. And typically, AMC does rally 50 to 100% before or after earnings. So either this week's likely to be very good or the following weeks after AMC earnings are likely to be very good. If not, both. Wouldn't surprise me if this week's good and after AMC earnings are good as well. Now, we got a lot more to cover in the next video coming out at 4 p.m. today. Guys, stay tuned. I will give you a full breakdown of the technicals and my price prediction for this week on top of a lot of other key information that you need to know heading into this upcoming week. So thank you guys for watching. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section, and get ready for a crazy week. Enjoy the rest of your day, and I'll see you in the next one.